Hi everyone, it's Tim Knight, Slope of Hope. Last day of the month, August 31, 2010. I usually don't start these things with much of a plan in mind, and today's no different. Just wanted to talk about what I see. I'm starting off here with the ES for all the minute bar data that I've got. And allow me to speak a minute or two about this graph, because I think I've got a few things to say about it. So this goes back to April, and here, of course, we have kind of the last gasp of the 1 month, or like 13 month mega rally from March through April, and we got started to fall, and the flash crash kind of soon after that, and we established a range, and that range has been in place. It started in the spring and it's lasted all summer, and God help us if it's still here in the autumn. This range has been in place for a long time, and the range is basically 100 points from about 10:30 to 11:30 on the ES. Day after day, week after week, month after month, we're just bouncing up and down. Some of the bounces can be seen as big, like so. And of course, within that, there's a lot of little kind of medium-sized bounces, and then zoom in even closer, and you get the tiny ones within that. I mean, today, all by itself, it's just bounce city. We've got like a 22-point range there. Am I doing my math right now? More like 14 points. As I said, I don't prepare these. I'm just kind of being extemporaneous here. But this is just a whirlwind, and really goes to why, as a swing trader, it's just been crazy, because a lot of my setups really need to move for a week or two to produce reasonable profits. Having this thing where everything shifts every few hours is just really, really, really difficult. Although I don't regret not being a day trader these days, because just given my trading style and temperament, I think that that would not mesh very well. So there are a couple of broad ways to see this chart. The first way is bullish, and you could surmise this is bullish by noticing that we are certainly at the lower end of a very big range, as I said. This level here at about 1040 has been holding strong kind of since the flash crash, really, if you look at it, but even without that, certainly since late in May. Time after time, with the one peculiar exception of that first week in July, which ironically was the setup for this very broad rally. But the bullish view of this is that we're at the bottom of range, and we've got nearly 100 points possible to the upside. The more bearish view of this would be that that bottom has held, yes, but it's not going to hold forever, and it will break at some point. We could look at something longer term, like the S&P 500, to think about that some more, because as we hone in on this, and I really haven't changed these drawn objects because they're my constant reminders of what I'm shooting for. We hone in on this. The target here of between 925 and 950 still makes a lot of kind of visual sense. I would also point out that the rally, the Bernanke rally slash better news about the economy, sure didn't last long. It basically lasted on Friday, lost most of it Monday, and today we sort of just noodled around on the low end of that. So just as this back here on the 17th didn't sustain much, this last rally on the 27th, 10 days later, sure didn't sustain much either. My point is that, yes, this is a range, but ranges are, by definition, always broken. And this will break at some point, and my assumption is that it's going to break on the downside. Okay, So let's just thumb through a few index charts. As always, some I'll ignore and some I'll speak a moment on. Here's the Nasdaq Composite. This has actually been somewhat weaker of late, and one nice thing is that little mini rally last week did set up some nice clean stop levels. So in this instance, I've got 2154.99 as my kind of oh crap level for the Nasdaq Composite. CRX doesn't really merit a lot of discussion. There's China. Gold, I did a post on today. This, certainly didn't close at the day's highs or anything, but let's face it, it's one of the only markets that has been showing strength. If you look at the likes of, say, silver, up 1.61% today, gold up about 1%. These have been, in spite of a lot of inflation, evidence of deflation, holding up terribly well. It is funny that the Dow changed 0.05% today, because it certainly seemed like a very dynamic day. We're seeing a lot of these kind of spinning top patterns on the indices, suggesting a lot of indecision. I also think it suggests that end of month weirdness that we see. Thumb through the charts. One area which I guess you could, if you were charged with making a bullish argument, might be along the lines of the small caps. These certainly are battered down to a level that has been in place really since for a year. So on the one hand, the Russell hasn't changed nominally in a year's time, and on top of that, you're at the bottom of a pretty solid range here. There's a lot of activity around and just beneath this area, so that's why I'm not jumping up and down bearish right now, even though all my positions are bearish. I did buy FXC at one point today as my one hedge position, and I sold that at a small loss not long after, just because as I was looking at the euro-dollar action, I really was unimpressed. Semiconductors had a pretty bad down today. I'm not sure if it's just Intel. I didn't dig down deeply to see why semis were so weak, but they're definitely must be the reason why the Nasdaq had such a relatively weak day. The utilities, really weird and uninteresting right now. The VIX gets mentioned a lot simply because, in spite of all the seeming chaos, this thing is still in the mid-20s and lost a good chunk today. So for those active in the options world, that is, of course, particularly important. And we'll wrap up with just a couple of bond-type items. One item that I shorted today and covered at a profit, and thank goodness I did because it got strong, was TLT. There's not a lot of technical basis for this particular line. I'm just going to put it there as a marker because that was the high from back here. But I'm kind of watching with interest this extraordinarily strong market, which this year has gone up deep into the double digits. So bonds have been truly extraordinary, and by the same token, interest rates are just really seem to do nothing but fall, kind of like, I don't know, natural gas. Anyway, so we enter a new month, September. This, like January for the bulls, is kind of the month for the bears. Even though October has the fame for the big crashes, September is statistically the weakest month. And that could be a bit of a self-fulfilling prophecy, who knows. But I am about 118% committed. Many short positions, got 216 shorts and 2 puts. Yes, I've re-entered the world of options in a very, very tiny way for the first time in at least a year. Wasn't a bad month. Let's hope for a real good September. We'll see how it goes. That's it from me. Good night and good luck.